Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar Traders. We are at the Money Show in Vegas at the Mandalay Bay. Come on down to the booth number 613, and come join us. We've met Omniacs already, and it was only a setup day, so this should be great. All right, traders, let's get into some charting and some analysis for Tuesday, May 13th, 2008. All right, traders, in the last video, I showed you that we were rejected at a 200 bar moving average in the NASDAQ and in the Dow, and the S&P never even got there. It looks to me like now it wants to do one of those two-day rallies before it turns around and dumps back down again. A lot of people are getting euphoric over this little rally, but I say if crude even considers, like right now, it's having a two-day drop, it looks like. If it even considers stopping and heading back up, we are going to head right back down. I like to sell two-day rallies in bear markets. I like to buy two-day dips in bull markets. Crude's in a bull in a two-day dip. S&P's in a bear in a two-day rally. Makes sense to me. For whatever reason, the S&P decided to marry itself to whatever the crude is doing. It does the opposite. You know, markets correlate from time to time and then just break away. Right now, the S&P seems to be correlated to the opposite of the crude. And hey, we'll trade it for what it is. So with that in mind, I got a couple of charts. I want to show you an illustration of why we're going to trade long today for Tuesday, May 13, 2008. Let's go look at the charts. You'll get a little better explanation of the trade. Okay, traders, which we're looking at, the first chart on the board is the NASDAQ June Emini Daily Bar. The NASDAQ Daily Bar, right here, you are looking at the 200 bar average. And this little tick right here is tonight's trading, and we are above that average at the moment. And we had a nice solid day up Monday, and you could get a nice little rally for Tuesday. But I'll tell you right now, I'm not falling in love with this rally unless we can settle for at least 2 days above the 200 bar average. At least 2 days settlement above the 200 bar average. If we get that, maybe we'll think possibly we're getting more than a 2-day rally. But all I see happening here is a quick 2-day pop, and then everyone's going to go, what are we doing holding these high-priced longs, in my opinion. We're very proactive at the Omni Trading Academy. We don't try to tell the markets where they're going. We let the charts tell us where the markets are going. And right now, the charts are saying, hey, a little bit of a rally, but don't fall in love with it. And that's the way I'm going to play it. Let's look at another chart here. Okay, traders, the next chart on the menu here is the S&P June Daily Bar. And that, as you can see, is inside of a channel. It just got up. It tested the channel on Friday. Monday rallied up, and today is a little higher. That's a bit interesting to me. This is the 200 bar average up here at 1446. I don't know that it can get to it, but it sure is trying to make an attempt. Again, I don't think it's anything more than a little pop in what is a bear market, but we will let the chart speak to us on a daily basis. So that's the S&P riding along this support right here, and it is holding the support for now. So what can you do as an analyst? You look at the indicators. If they're bullish and you're bouncing off of a support line, you got to trade from the long side that day, and that's what we got planned for tomorrow. Let's look at one more chart. Now, here's another look that may convince you not to fall in love with the upside of this move until the charts tell you better. Okay, traders, the next chart you're looking at is the Dow Jones Industrial Average Daily Bar. And look what you got here, traders. Once again, the 200 bar average staring this market right in the face. And you know what I see that's interesting? I have said many times that an upright head and shoulders is a bearish indication. And if you have one of those in a bearish market, it is likely an indication that the market will go lower. Here we are, shoulder, head, shoulder, undoubtedly. It's building one right here, and that tells me we can just fill this in a little bit and turn around and drop right back down. That's where we are at this moment in time. And again, we're short-term traders, so we're not so concerned with what will be happening out here in time. We're concerned with what's happening right now in time. And right now it says you can probably buy it early on Tuesday, but don't fall in love with the upside, especially because of the upright head and shoulders. There it is, traders. 3 good charts to give you a look at what we're looking at here at the Emini Trading Academy. Go do your own homework, pull up your charts, and make sure that you agree with our analysis before you consider taking any recommendation from us or any other trader out there. So, you've seen the charts? That's an interesting look, right, traders? Yes, we're in a bear market right now. Yes, you know my feet have been tottering between the upside and downside, but mostly bearish with looking at this little dead cat bounce that we think is all it is. And now we had a one-day rally in what was just a bearish drop last week. If we have another day up, that's probably enough to kick them out on the short side. Again, we will let the analysis tell us that. We will not tell the charts what they're doing. They tell us what's going on, and then we try and listen and take advantage of what they say. And with that in mind, again, for Tuesday, May 13, 2008, we got us a green Omni, baby! Yeah! I'll go for it. Let's see what happens. All right. Green Omni, S&P, the Omni says to buy in the mid to high 1390s. As we come down from 1400 into the high to mid 1390s, we're going to look to get long this thing. Traders who follow me at the site, you know exactly where we're looking to get in. If you don't know where to get in, traders, come on down to the Omni Trading Academy. The site is www.livewithoscar.com. Grab a membership and let us show you where to get in and out of these markets, hopefully successfully. All right, we are looking to buy it in the high to mid 1390s. Profit objective on this trade is the mid to high 1420s, traders. The mid to high 1420s or be out MOC by the close. On the way up, you may run into some resistance around the 1415, 1416 area if, in fact, this turns out to be a nice bull day. Keep that trade in mind. We also are bullish in the NASDAQ and have a NASDAQ trade lined up at the site. Again, if you don't know how to trade it, come on down to the Omni Trading Academy and let us teach you how to read these charts and get them right. Okay, traders, again, come on down to our booth at the Mandalay Bay and come hang out with us. It's going to be great. All right. Listen, you give me a call anytime you want, traders. I'm always here day or night, 702-629-4755. And don't you worry because those phones are ringing in the booth where we are at the trade show. We're running our show as we do every day on camera and microphone live in the chat rooms right from the Mandalay Bay Money Show. So participate. If you can't come to the show, at least join the site and watch us from there. We have 2 camera views, one at the top pointing down at the whole booth, and one directly on me as we would any other day. Nothing else changed except for the venue where we are standing while we're recording and speaking to you. Okay, traders, send me some emails if you'd like to oscar@futuresanalysts.com. And of course, we have our YouTube presence with 312 plus videos waiting for you. A lot like the one you've seen here. A lot of them have a lot of in-depth analysis and a lot of great lessons for you traders out there. Traders, it is what we do. We are here to help you traders. We do so much work for free for the traders around the world, and we are trying to help you traders get this right because I know it is really, really difficult out there, and there are so many people selling crap, and it's pure crap. There's so many systems out there, they claim to be the Holy Grail. It doesn't exist. Forget about Holy Grails. Learn how to look at the analysis and learn how to be your own Holy Grail right there in your heart because that's where you get your trading from. Okay, traders, I'm going to be quick because I got a lot of homework to do before I get back to the trade show. Make sure you do your homework. Always place your stops first and keep your emotions out of trading. And the best way to do that is to say this to yourselves every day. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.